Good morning, Alistair. A story that I read the other day, I'm going to read it out to you and just ask for your comments. From the ECB, they announced that gold had passed the euro as the second largest reserve asset, and also stated that central bank demand is likely to impact the future supply of gold. The comment goes on to say, a survey of almost 60 central banks conducted by the World Gold Council between February and April of last year identified the following three key drivers of central banks' gold holdings. One, a long-term store of value. I agree with that. And an inflation hedge. Number two, good performance during times of crisis. Well, so you can see it right now. Right. And number three, this is the one that is a key for me, an effective portfolio diversifier. They wrote, the central banks write, additionally, respondents pointed to default risks, geopolitical diversification and political risks as factors influencing their holdings, their central banks' holdings. Now, let's go back to the effective portfolio diversifier. I honestly see this as an effective portfolio diversifier. I mean, I have a look at the last 5 years. I don't know about English pounds, but in Australian dollars, gold is up 100% in 5 years. And I divide it by 5 and get 20% a year, right? But in the last few years, it's been 24%, 36%. An effective portfolio diversifier. Surely they can see that gold is a must. What do you think, Alistair?
Yes, I think we must bear in mind that the World Gold Council is basically preaching to an audience of investment managers in the main, and perhaps family offices. And if the World Gold Council was to say, for example, that gold is the only form of money without counterparty risk, which basically means it's an escape hatch from credit, then they would probably lose quite a lot of their audience. And the second problem that they would have is that quite a lot of their audience would, sort of back off from this completely. Because remember, the audience basically are macroeconomists. They are believers in Keynesianism or monetarism or whatever. They do not believe in sound money. They believe in government intervention in markets. This is something that has built up really since the Second World War. So the World Gold Council has to be slightly careful in how they approach this. I would have a different approach, but then I don't have the constraints that the World Gold Council has in this respect. The other thing I would say is that I don't believe that the World Gold Council has invested anything in understanding the economics behind money and the difference between money, which I would define as money without counterparty risk, which essentially is metallic in possession, and credit. So that's a huge area which they're leaving very, very much untouched. And on that basis, I can understand why they're saying that. Nevertheless, the World Gold Council does produce a lot of very, very useful research. And a lot of the information we have on central bank behavior and so on with respect to gold comes from the World Gold Council. So, well done them. I think that's very good. And they also track ECF holdings, which I think is another very, very important area. ECFs are beginning to grow again. And of course, this has quite an influence on the demand for gold, for physical gold in markets, and obviously has quite a significant price effect. So that I think we have to understand that the World Gold Council is doing a specific job towards a specific audience, but nevertheless, they do provide some very useful information. As regards the ECB saying that gold has now overtaken the euro as the second largest reserve asset, that I think is a portfolio effect. I mean, we have seen obviously an increase in gold holdings announced by the central banks, and also we have seen the price rise. But I think it's more price than an increase in holdings. Now, having said that, there are reports from Bloomberg, for example, that central banks are acquiring considerably more gold than they are declaring. This is fine because what a central bank declares as reserves is one thing. It can act as agent, if you like, for other government departments, wealth funds and so on and so forth. The People's Bank of China, I think, is a classic example of this. So gold is actually, I think, probably quite a lot more important than suggested that this is now the second largest reserve asset. But the ECB has also been trying to trumpet the position of the euro, and it sees, declining use, if you like. I mean, it's not declining that much, let's face it, declining use of the dollar, and sort of thinking, well, perhaps the euro can be used more and more in settling international trade. So that's an area which they have also tried to promote. As a whole, I mean, the thing that's interesting is that the euro area is seeing quite a significant increase in gold derivative activity. And this is something that was pointed out by the ECB in its last financial summary, which I think was in May. And they reckon that exposure to gold derivatives has risen by 58%. Now, this, I think, is important because the other side of this has been the gold that has gone to COMEX. Of course, if, let us say, you buy gold in Europe, in order to take the arbitrage, you cover your forward position by, say, buying an out of the money option or some other form of derivative, whether it's a forward but probably not a future, because the idea is you're selling futures. So that, I think, is a source of concern, because at some stage that's got to be reversed. And when it becomes a reverse, you have to ask yourself the question, where is the bullion going to come from? So that, I think, is behind the concerns that the ECB has on the international currency and, if you like, paper gold scene.
Well, good answer, and I wish the World Gold Council all the best, but I'm just a little man on the street, and what I see here is that an effective diversifier. I'm all in. I'm all in, and I can't be more pleased by holding gold and silver in my portfolio, and it's a little bit higher than 5%. All right, thank you very much, Alistair.